Hello everyone, today is Friday, May 29th, 2020. Hope you guys had a great week of trading. I did not because I'm not even in this market, right? I sold here and this market took off. I didn't really get back in, let's be honest. And so I'm just watching the market these days. And obviously the market is going towards my 3100 target. This level is getting incredibly close. Today we just had a dip and we came back again. Again, I don't want to talk too much about the market these days because it's not doing much. It just keep going up. There is absolutely no bearish signs in this market. Every single sector, every single industry, every single division of the market is going up. Okay, and in my previous video, the title of the video was risk off, right? The market is in the risk off mode, so there's plenty of money on the sideline right now. There's plenty of money in the market. There's plenty of firepower from all sorts of larger players, the whales of funds. They can borrow money at cheap, right? Because interest rate is zero, so they can. There's not infinite amount, but there is a sufficient amount of money on the sidelines that's willing to buy the market at any level, okay, at any level around this area. And this market's just going to keep going up, and I am not going to short the market. Do not short the market. That's just stupid, okay? Look at this. Look at this. Even if the market flattens out, it could flatten. It could just slowly climb up for a month. For many months, for like a month or two. So don't try to short the market, right? Just let it climb, let it lose its energy. Then eventually you can find a crack, then start shorting, right? Don't short right now. Just stupid. Okay, so let's take a look at the cryptocurrency market. Bitcoin. Let's see. So Bitcoin today, not doing much, just consolidating. Probably just gonna. I think we're just gonna consolidate in this area for a while, and yeah, not gonna be much of action going on. I think we're just gonna consolidate in this area. I mean, these trend lines. Cryptocurrency have better, the trend lines works better in cryptocurrency, to be honest. But they break the trend lines all the time, and sometimes it doesn't mean anything, right? But as you can see, it's going to consolidate. But it's building energy. I think that Bitcoin will eventually, we're going to have a huge breakout sooner or later in June and July, as I've been mentioning in all my previous videos, okay? Okay, so today I want to talk about some geopolitics regarding to Hong Kong. I was reading news today, and this was happening, that it seems that the United States is going to sever the special relationship with Hong Kong. Special relationship would be the Hong Kong is a part of China, obviously, but Hong Kong is the autonomous region, and the U.S. has a special policy towards Hong Kong's being its autonomy as a special trade and economic relations with Hong Kong. And I think United States does give Hong Kong a lot of benefits in terms of the tax benefits. The tariff is much lower if you export from Hong Kong. And also Hong Kong has a Hong Kong dollar, so that thing is freely convertible. So if you set a company in Hong Kong, you enjoy all sorts of benefit if you are trading between United States and Hong Kong, essentially China, right? So if Hong Kong loses its special status with the United States, then Hong Kong just becomes another city in China from an economic standpoint. I'm not gonna get into politics. I don't care about Hong Kong's protests or democracy, all that stuff. I'm just talking about economically. So if Hong Kong loses that status, it's not good. It's absolutely not good, right? Because it's not good for the Hong Kong dollar. The Hong Kong dollar is actually pegged to the US dollar, by the way. Hong Kong dollar is pegged to the US dollar, which means Hong Kong needs a foreign reserve, right? And the foreign reserve, it really depends on whether China is able to provide Hong Kong the foreign reserve, plus if Hong Kong has a trade surplus with the United States or with the rest of the world, right, to maintain the Hong Kong dollar peg to the US dollar. So having a trade surplus in a more favorable trade condition, like having the special status, is absolutely beneficial for the Hong Kong's economy. And by removing that is basically lowering or kind of downgrading Hong Kong's status as a financial center in the world, right? And that's just not good. So one thing is, I think my opinion is I don't think China is gonna do much about this. China is downplaying Hong Kong, and they are going to continuously support Hong Kong, but Hong Kong in 2020 is different from Hong Kong in 1997, right? In 1997, I think Hong Kong GDP was like 13% or some really huge percentage of China. And now Hong Kong's GDP is like 3% of China, right? So Hong Kong is not as important economically wise as China. And plus Hong Kong only has like what, 6 million people, and China has 1.3 billion people, and the Chinese government they have way more things they need to worry about than just a tiny city like Hong Kong, to be honest. And one of the article I recommend you guys reading is on the South China Morning Post. South China Morning Post, by the way, is a Hong Kong media. It's not Chinese state media. This is Hong Kong media. It's pretty. They're not biased. They are biased. They're more favored towards Hong Kong, actually. This is not a Chinese media, by the way. It's called South China Morning Post, but this is a Hong Kong private media. And one of the articles they talk about is China Rich Report. And I've actually been to Hong Kong several times. The last time I went to Hong Kong was actually pretty recent. I went to Hong Kong back in 2018, around September. Had a great time there, and I like the city. The problem is it's just way too crowded, and I always think, and their economy is getting more, their economy is being kidnapped. I think that's a word, kidnapped by real estate. The real estate in Hong Kong is incredibly expensive, and the entire economy kind of revolves around finance and real estate. Basically revolves around financing and lending and leverage, basically, right? And so that's the top five. I think what they call the big five family in Hong Kong. They all kind of rooted in the real estate. Their wealth is all rooted in real estate. So Hong Kong is real estate industry is huge in Hong Kong, and the Hong Kong real estate market is obviously the most expensive in the world. It's incredibly expensive, and the entire economy is basically kidnapped by real estate, and especially for a younger generation in Hong Kong, they don't really have a hope to buy their home. If you have seen a lot of videos on YouTube, a lot of Hong Kong kids, these younger Hong Kong residents, they just can't move out of their parents' house. They sometimes like 3 generations of living under one roof, right? Under like 2-bedroom apartments. It's actually quite common, and so they really don't have any future if they stay in Hong Kong, because the housing market is just so expensive. They can't build a family there. It's just really expensive, and that is the desperation that you can feel, especially when you go to a restaurants or in general in the public. You feel the pressure, the living pressure in Hong Kong, and it kind of sucks. although the wages in Hong Kong is way higher than than average wage in China, as you can see here. But Hong Kong, living in Hong Kong is tough, as if you're not rich. Again, if you're not rich, living anywhere is pretty tough, right? This article basically I want to talk about is that I don't think China cares much about Hong Kong, or they care about Hong Kong in terms of its economic status, in terms of Hong Kong dollar, in terms of being a free trade zone. They want to continue to develop Hong Kong and making sure Hong Kong still functions as it's intended to be, right? As a free trade zone with the United States, with the rest of the world. As the renminbi, the Chinese dollar, the Chinese currency right now is not freely convertible. Although it's close to freely convertible, but in terms of larger amount, in terms of it's definitely nowhere near as free as a Hong Kong dollar. But one thing that but the thing about the protests in Hong Kong, about the instability in Hong Kong, China might just foregone that maintaining Hong Kong is special privilege. The reason is, if you look at this, China has 600 million people with a monthly income of 1,000 yuan, $140. So almost half the Chinese population earns on a monthly basis only $140. So a year they're making like $1,500, $1,600. So imagine you work for the entire year, you only make $1,600, and that is a reality. This is a premiere, right? This is reality for half the population in China. Although China has the second largest GDP in the world, you have to keep in mind how large the nation is, right? How many people are there. Per capita basis, the monthly income, the median monthly income is actually very, very low. Okay, this 600 million people are the primary concerns of the CCP, the Communist Party in China. They are the primary concern because these guys, they're most vulnerable in terms of economic hardship, right? And they're most likely to revolt. Okay, if you look at the Hong Kong protests back in last year, there's a lot of issues. You can see like people going on the street and fighting with the police, all that stuff, right? That's only 6 million people. That's a city of 6 million people. Only maybe 2 or 3 million people. I mean, I think that's kind of exaggerating, but let's just say half the population participated in the protest. That's only 3 million people participated in the protest. China has 600 million people with a monthly income of 1,000 yuan. Keep in mind, the monthly income in Hong Kong is 10 times that, right? If these guys starve, if these guys go on protest, that's like 20 times, sorry, that's 100 times. So 3 million, 600 million divided by 3 million, that's 200 times of the population going protesting. These guys are like, China has way more concern over these invisible population that's not traditionally being exposed in the Western media, right? These guys are, you live in Hong Kong, you're pretty privileged because you are being exposed to the world. Anything happening in Hong Kong is like world news, but anything happened to these guys, nobody gives a shit. I mean, nobody cares, right? And that is the thing. That is the thing. And these huge amount of population who are making around $140 a month are the primary concerns of Chinese government. And Chinese government they have to make sure that these guys have jobs. They have to make sure that during the pandemic, these guys they don't lose their jobs, or they can quickly find jobs again, or they don't lose their job for a long time. Because if these guys are in very hardship for a long time, it creates irreversible social instabilities in China. That is a huge concern. Okay, not Hong Kong. Hong Kong, who cares? Who cares? Like the CCP, the Chinese Communist Party, they don't even care compared to this situation. That's why recently the premier, I was reading another news. They're opening up. They're relaxing on some city standards. They're allowing people to do business just on the street, like to have their own stand and food stand, all that stuff, to help out small businesses, to help out people to be employed, to allowing selling stuff on the street, which is normally forbidden. Normally, because it's not nice to have all these shops just on on sidewalks, right? And they're allowing people to do that. Is it because the pandemic, right? The coronavirus is causing a huge drop in demand for Chinese goods and services. The export-driven economy is a demand-side shock, and a lot of people lose their job, and they have to find somewhere else or something else to do. And the nation can't just print money and support all these guys, which is going to cause inflation anyway, which is not good. So that is this is a serious situation in China, and Hong Kong is nothing compared to this. This is 200 times bigger than the problem in Hong Kong. Okay, and the Western media, they don't really report these kind of stuff, right? Yeah, that's the thing. These invisible. They are. I've been to some really not terrible, but I've been to some really less developed part of China. And the less developed part of China is like so underdeveloped, right? And if you go to all these larger Chinese cities like Beijing, Shanghai, Shenzhen, these cities they look better than New York, right? Because all these infrastructure are new. They were built in the last 30 years, so they look much newer than New York, and the streets are much wider because they have planned in the last 30 years, right? So they have more modern city planning, and you probably think China is rich, but Beijing, Shanghai, Shenzhen, Guangzhou, all these larger cities, they are not China, right? They are not a proper representation of China. The proper representation is the inner cities. If you go inland, go to smaller towns, go to third tier city, what they call them, third tier, fourth tier, fifth tier cities. That's where you see the real China is. That's the real China. Obviously, there's this is rich part of China, and there's the real China. And I highly recommend you guys, if you travel to China, you will see that the half the population living monthly income of $140 USD. These are the real part of China, and they have way bigger problems. Okay, another thing about Hong Kong is in terms of economically, Hong Kong is a special part of China. But one thing you want to know that they actually they don't hand over any tax revenue to the central government in China. So they have complete autonomy in terms of economically, and they're enjoying all these special treaties and with the United States, with China. So unfortunately, the economy is being kidnapped by real estate again. So the average Hong Kong person, it sucks. It sucks to be living there. But the rich part of Hong Kong, they are like living like kings. Like the rich in Hong Kong, they enjoy all these benefits, right? Low tax, special treaties with China, with the United States, freely convertible currency. They can go anywhere they want. In Hong Kong, a lot of people, they hold British passport. They also hold Canadian passport, or any U.S. passport. They're U.S. citizen. If you're a citizen of China, you can't have dual citizenship. But if you're a citizen of Hong Kong, you can actually have dual citizenship, which is really amazing. And they have all these benefits. It's great. It's really great to be a Hong Kong person. As long as you're rich, you enjoy all the benefits. You enjoy freely convertible currency, great identity, Your passport is awesome, all sorts of benefit. But I think that might come to an end sooner or later. Okay, so that's enough my economic understanding of Hong Kong. So my conclusion is that I think the Hong Kong dollar is going to disappear within the next 10, 20 years. I don't know when that's going to happen, but it's going to disappear. Well, the reason is we have we already have something called an offshore renminbi, offshore Chinese dollar, right? The offshore Chinese dollar is actually already, so Chinese yuan itself is now freely convertible. It's partially convertible. This offshore RMB is actually freely convertible. This is freely convertible, by the way. You can actually buy this on your Forex account. So you can buy this, sell this freely on your Forex from your Forex broker. You can actually buy this, the CNH. And the offshore renminbi is basically the same as the renminbi, the currency, except the offshore renminbi is offshore, is not within China. So if you're able to, like, for example, if you have a bunch of cash, you go to China, you get a bunch of cash, right, from China, then you take it out to another country, that becomes offshore renminbi. And there are several hubs in the world that trades offshore renminbi. One is actually Toronto, Canada, was one of the renminbi hubs. I think the other one is somewhere in the United States. I don't know where that is. Chicago could be. Anyway, so if you can bring the renminbi outside of China and that becomes offshore and that becomes freely tradable, you can actually exchange to USD with all these markets and also with your banks, right? If you bring Chinese yuan outside of China, if you go to any of the banks in the United States, you can actually exchange your yuan, the Chinese renminbi, Chinese dollar, into United States dollar. So the money is freely convertible. It's just not freely convertible within China, like physically within China. But once you go outside of it, the money is freely convertible. So they just have to make this to replace Hong Kong dollar. Technically speaking, it already can be done. But Hong Kong dollar is special, right? It has no restrictions. It's freely convertible. So Hong Kong, if you have never traded the Hong Kong index, it's called Hang Seng. The Hang Seng is, one thing I want to talk about is that what's happening in Hang Seng, right? If you look at this, the Hang Seng index, it's just pretty volatile. You can see the economy is very cyclical. You can see that we had a 1997, obviously, is the Asian financial crisis. Then it came back again 1999, 2000. That's obviously dot-com bubble and burst. Then we have the huge rally from 03 to 07, which is the financial crisis, the mortgage United States, right? The Hong Kong economy is it's tough to trade this index because it's being affected by the Asian economics status, kind of status. Like for example, here, the 1997 crash, it was caused by the Asian financial crisis, right? But if you look at the Dow Jones, if you look at U.S. index, the index in the United States, like the Nasdaq, didn't really affect much by it. But and if you look at the 2000 was affected by the dot-com bubble. It's affected by the United States. So hence saying the Hong Kong index, as we mentioned, Hong Kong enjoys a special status, special treaty with China and with the United States. So it's being affected by both regions. It's being affected by the economy in Asia and the economy in the West. Okay. So let's take a look. This index, you can see that is highly volatile since 09 and hasn't really gone up that much, to be honest. So it sucks. And if we put this into logarithmic scale, you can actually see a much clearer picture. You can see that since 1998, this index hasn't gone very far, right? Since 1998, since actually 1997 is when Hong Kong went back to China. Before 1997, Hong Kong was actually a British colony. So between 87 to 97, that was probably the best period. And also 03 to 07 was another very steep rally from a log scale, and these two periods are probably the best. But if you have investing 08 until now in Hang Seng Index, unless you're a trader, you're probably going to be making money. But if you are a long-term investor, you are probably just losing money. You probably barely broke even compared to the inflation rate. So this is a pretty bad investment, for sure. And I don't know what's going to happen for the future of Hong Kong, and we'll see about that. And enjoy your weekend. I'll see you next time.